So we told you earlier that the power value rules of the Nigerian Stock Exchange is built to take effect on Monday, which is 29th of January, and that also includes the pricing methodology. Joining us now to discuss and help us understand what this rules that has been amended implies for traders, for investors, is Mayowa Sunday, who is the head of investment at Helix Securities Limited. Thank you so much for joining us on the program this evening. Let's look at these new rules. They got the approval from the Securities and Exchange Commission for that last year, March 2017, and now we have it coming into play on Monday. Give us your perspectives of these new power value rules and, of course, the pricing methodology which is meant to be implemented.
Okay. Basically, the power value pricing methodology is just an initiative of the exchange aimed at bolstering efficiency in the market, liquidity to a great extent, and also ensuring that as much as possible, price moves noticed in various securities are actually material. And as much as possible, it has far-reaching implications for all stakeholders within the capital market ecosystem. Talking about traders, talking about the investing public, vis-a-vis the categorization of the various stocks traded on the market. Basically, those stocks have been categorized into three divisions. We have stocks trading above 100 naira. We have stock trading between 5 naira and 99 naira, 99 kobo, and then we have stocks trading below 5 naira, which are in category C. So different tick sizes, different tick volumes are applicable in terms of how well you can, how high or how low you can move these prices, which is somewhat contrary to the previous arrangement. Again, all aimed at ensuring that we have a much more efficient market in the current year.
You said we have a much more efficient market, but how is this grouping from Group A to Group B and Group C in terms of the three categories that we have for the power value? Now, how is this meant to bring about an efficiency different from the 50 kobo power value that we had before now?
Okay, basically the old arrangement is such that with as little as 1 kobo, you can tick a price upward or downward, irrespective of the price and the current pricing of the stock, meaning that companies like Nestle, Nigerian breweries, the same way you can take up their price by 1 kobo, equally applies to stocks like, let's say, NACO that is trading much more below, lower than that. So basically what the market hopes to achieve is to ensure that as much as possible, the categorization that a stock falls into actually has a role to play in how high or how low you can trade, how high or how low you can move the price during a regular trading trading cycle. So that way you don't see unusual moves. You don't see investors or traders trading with lower volumes and being able to move the price as such, but rather you have share prices moving in accordance with their position on the categorization, basically.
So how does this really affect the whole off-market negotiated transactions now?
Okay, basically with effect from Monday, when this the pricing methodology will take effect, the investing public, traders, the brokers alike will have that obligation to notify their clients, because the reference prices are going to be changing from Monday. Basically, where you have a case where clients have engaged in previous off-market decisions to engage in a particular pricing. By the time you get to the market on Monday, you may need to review those decisions, those arrangements. Otherwise, the machine would naturally not match.
Especially when you have open orders pending.
As a matter of fact, by effective Monday, all good-to-date orders already on the machine as at the close of trading on Friday are going to be effectively taken off.
Wow.
Because the new reference prices are going to be taking effect. Probably in the course of the discussion, we are still going to have time to look at it, because the tick sizes effectively means that while a particular stock that is trading, let's say in Nestle, for instance, now, you can only tick Nestle up by 10 kobo. 10 kobo rather than the old practice of 1 kobo. And again, you need the minimum of 10,000 volume in one single trade to move that price forward. So if let's say Nestle were to close at 1,501 naira on Friday, and you are probably thinking coming on Monday you want to do a neck deal at 1,506 or 507 naira, the machine would naturally not allow you to do to execute that, because now the reference price automatically changes to the nearest decimal, which is like 1,510 kobo or 1,520 kobo.
So let's not scare our viewers and the investors because of the implementation date, which is 29th of January, in essence, next week, Monday.
Good.
As an investor, as a shareholder in a company, I have open orders. What do I need to do now with my broker, with my dealers in the immediate term?
Well, in the immediate term, basically, if you have open orders on some of the highly capitalized stocks, probably you may not really have much to worry about. Okay. But that naturally, because when you look at the categorization that the NSE has done, you have the bulk of about 116 equities are actually trading below 5 naira in the market. So they are likely going to be the ones you probably want to look out for. If you're looking at the tick size for stock within those categories, you just have the same 1 kobo, just like you have in the old structure, the old arrangement. So meaning if you still want to go out with your neg deal, you have nothing to be afraid of really, because it's as good as what you have as of Friday. Just 1 kobo. That is the tick size. That is the value with which you can move a price up or down. So you have basically nothing to worry about. But if you are going to be doing negotiated deals on stock trading above 5 naira or stock trading above 100 naira, then you will have to definitely review your decisions with your counterparties.
So let's talk a bit about this whole price movement thing, where you have minimum quantity and then you have the par value. If, for example, for a group B now, and I hope we can get that slide back on screen, for a group B, you have a security that traded at 5 naira. Can my broker dealer bid for like 5 naira, 1 kobo eventually?
Okay. If as of Friday, that stock traded at above 5 naira, let's say it ended at 5 naira, 5 kobo on Friday, your broker cannot trade it at 5 naira, 6 kobo Monday. Because for stock trading above 5 naira, who are categorized under the B section, you can move. The maximum tick value is 5 kobo. Okay. 5 kobo. That means you can't tick them up by 1 kobo. You can only trade at 505 or 5010 or 510 or 515 in multiples of 5 like that, not 501 or 502 like you used to have before.
So, and how long can a security now trade, within a price range before you can now have it reclassified? Okay.
According to the disclosures by the NSE, a stock must trade a minimum of 4 out of a 6 consecutive month period. If it traded within that band, within a 4-month cycle, out of the preceding 6 months, it's going to be retained. Otherwise, it's going to be taken out and reclassified, either going backward, maybe going to category C, or probably going to, depending on the pricing, maybe going to category A. For instance, a stock trading at about 1 naira, usually probably previously has been at 95, 96 naira. If that stock can trade 4 consecutive months out of a 6-month cycle, or 4 months out of a 6-month cycle within that band, then at the end of the rebalancing period, the exchange is going to reclassify, probably taking it now to Group A.
I know series of seminars, workshops held on these rule books during the week, and I want to believe that you also participated in it. What were you told about, how all of these will feed into the X-Gen trading engine of the NSA?
Okay.
Because they have been quoted, most of these shares or stocks have been quoted at 50 kobo par value for so long.
Okay. If I were to look at the context under which you raised that question, for stock trading at 50 kobo, effective Monday, you don't have that 50 kobo par value.
It crashes.
It's automatic. It's effectively taken out, meaning that the exchange will now allow market forces to determine the actual value of a stock. You have a floor price, which is just 1 kobo.
Okay.
But the 50 kobo nominal value that used to be the case is no longer there. Now, for stock trading that has been dormant,
I have nothing to worry about as an investor. Is that what you're trying to assure?
But no, you actually have quite a lot to worry about.
Wow.
It has pros and cons, really. Because whichever we look at it, what the exchange is trying to do is to sustain liquidity in some of these relatively dormant stocks, really. Right. So basically, if a stock has traded below, has been stagnant at 550 kobo for so long, going forward, you can trade those stocks at probably 30 kobo, 40 kobo, and in that way, the investors can get their funds back one way or the other.
Well, investors, we're not out to scare you this evening, but still ahead on the program, we'll help you understand what your role, my role will be in this new power value and pricing methodology of the Nigerian Stock Exchange, but that's after the break.